The Dow and the S&P 500 have been showing that even when they were trading below the T-line, they would eventually close it above the T-line. Notice the indecisive trading as it was kind of pulling back until we had a big either shooting star or an inverted hammer, which told us they were going to move in the direction of how they opened it. And today they told us which way they were opening it. However, there would have been more confidence in studying the NASDAQ chart. As seen in the NASDAQ chart, when it came up and started pulling back, they couldn't produce or trade or close below the T-line. And there was a slow rounding bottom trajectory. And now that they've broken it out to the upside, had a couple compelling reasons why we were probably heading higher. Number one, we weren't in the overbought condition anymore. Number two, we started seeing a doji with a little gap up. Doji, little gap up. Remember, a very simple trading rule in candlestick analysis is the price will usually move in the direction of how they open it after a doji. The fact that they gapped it up out of this trading range today tells us this is wave one, wave two, a fry pan rounding bottom, J hook, wave three starting, and wave three has a potential magnitude as wave one. This is not rocket science. This is merely having a graphic depiction of what occurs in investor sentiment time after time, year after year, decade after decade. The Japanese rice traders just put it into a graphic depiction for us. One major advantage about candlestick analysis is that you don't have to take somebody's word for it. You can go back and analyze what happens coming out of a slow curve pattern. You can go back and see charts that have a slow curve that break out, or charts that have a scoop pattern. We know what should happen after a scoop pattern. Notice the flat handle and then the scoop. The scoop will give a slingshot effect to the upside. A scoop pattern just is a flat indecisive trading area followed by a little scoop that has a strong slingshot effect to the upside. Candlestick patterns basically put you into situations where the probabilities of being in a strong trade are much greatly put in your favor. ITT illustrates a scoop pattern with a slow curve, breakout to the upside. This information is just telling you what happens in investor sentiment time after time, year after year. Investor sentiment is the same. It's one of the most reliable aspects of investing there is. That'll be it. We'll see you in the chat rooms.